So as you can see, it slowly bled out of the trend. So from here, there's no real advantage or edge that trends will give us. It's just strictly moving as if the VIX is indecisive. So the market will also be indecisive, which indecision looks like slow bleeds, right? So you'll get slow bleeds, pops, slow bleeds, pops, until the VIX makes some kind of leap or bound through a level. So here's a level here, here's a level here. If we get a break and a push through one of those levels, then the market will move a little clearer. Other than that, again, bleeds and pops. That's what to expect. All right, so here we go again, back above this damn manipulation level. Aggressive entries. Let me go back to this. So a good entry for this, if you're trying it again, would be 19,892. And one of these gotta go. Let's try to get rid of this one for now. So this level here, the manipulation level, would be the best area for a buy order. So 19,892, because it will just continue to manipulate that level. But if we can get it, then we can break out of the 30-minute highs up there at 19,965. So it'd be cool to see the trend actually fix itself. So we probably have to move this like that. Yeah, cool. All right, so we're getting relief because VIX, again, like I said, you need to break through the level, right? And here we are, broke through, and we're actually getting direction of it. So right here, we're at the high. Technically, this is your safe take. If we're going to make a higher high, then we need to see just momentum all the way to 19,971. So we shouldn't have to hang out in any areas or see any crazy pullbacks. If we do, then it's going to be like a accumulating range instead of a very aggressive trendy market, at least for the time being. $10,000, dude, no way. All right, it's up to the highs here, so we should see some consolidations, and hopefully we can break out of this red level and touch our 19,971. But again, if this wants to be a accumulating range, then it will try to reject here and then go, I would say max to 19,913 and hang out here for a while. Then you'll see one side liquidate and then run. So overall, based off the U-turn, right, the double bottoms down here, and then again, the lower band of the trend still holding up even after that big push under the manipulation level. There's, in my personal opinion, the market doesn't move off of my opinions, but my opinion, there's no reason for us to keep going down. So we need to make it to this higher point, because obviously we can't fall with the money that we've acquired thus far. So. All right, family, we are approaching the price targets. If you don't want any tomfoolery, there's an order block here, and it's literally just $10 away from price target. So if you exit your trade now, leave a couple hundred on the table, but at least you don't have to experience any bullshit. I personally like my entry, so I'd like to hold this all day if it doesn't give me any bullshit. So that'd be cool. So we can get into questions. I like the way it ran away from this area already. So by the time we get over the questions and stuff, we'll reevaluate wherever the market is in its current position and then decide if this retracement is going to happen or not. So I'd like to see it happen. It doesn't have to happen today, but if we can at least get up to the high by the end of the day, then I would really like to see the after hours give us some news that would like blast us towards the retracement. Technically 20,140 is the level of interest for the 50%. So I would like to see this level. But I'm not going to put a time limit on it. It's going to do it when it does. So I got to roll with the punches. So for you guys, got some really good trades on here. Like the opening trade was fire. Second entry here was fire. The add-on through the manipulation, I could see may have taken some of your profit if you decide to stay in the visual screen. But overall, this was the move that was expected. So, all right. I'll allow you guys to unmute yourselves if you want to chat. Say it was good, but other than that, the videos are coming along pretty well. Here we are. We reached price target now. So there's price target. Top of the trend, top of that 30-minute level there. 20K on the day, 15 contracts. So is there any questions y'all got while we run it, or there's an order block up here, by the way. But again, we just want to get out of this trend. So I don't care. Can do whatever it wants.
So right now, if for some reason the market decided it wanted to keep going lower, what would be the levels you'd be looking at below? Besides, obviously, the gap that we have from contract, but that's a lot of price movement there.
Yeah, I would say following the VIX would be the best thing you can do for yourself if you want to be on the downside. The moment this VIX gives you some kind of pullback, you know, I'll put it like this. So this is the VIX's trend. So the only way this market should bleed out and like blast through lower levels is if we can get moves like this on the VIX. Clean run. So right now we're experiencing the top of a VIX trend and a clean drop, which is why we're getting a clean run. Same thing with last week. If you guys were on here, we got this clean drop, which gave us a pretty clean run on Zoom, right? We had a 10K trade that last time on Zoom. Today we had 20K trade here on Zoom. So anytime you can catch a clean run while the VIX is dominant in the market, then all you have to do is trade with that momentum. It's not specifically a level, unfortunately. But when you have that momentum, the level will reveal itself to you. So, for example, with this momentum here, as we U-turned back into the trend, then the revealing level was this high, right, of the trend. So this is where I would expect to experience most resistance. So that would be my case. So if you're to take sells, let's say at this very moment, then your next level of interest would technically be this midpoint. And if you can get past that midpoint, it would need to go to this low. And if it gets past that low point, then you know it needs to make a lower low. And this is the lowest low here on the 32nd. So if you get past all of that, then you should have a really good entry up here. You just don't want it to see it come back and close above this level. So as long as it stays below then, you're cool to hold for lower levels. And like you said, all you can expect really is the gap. So here's the gap level. So once you get under this lowest point here, that's all that's really in the way. And there's no reason for us to retrace after we do get some closes down here because this has no problem dropping anymore. A retracement only happens when you get the slow before the pop, right? And all of this is very slow. It's not going down. So it needs to pop. So if you do get the bleed out, then it doesn't need a retracement, which means it's going to just blast down to the next level needed, which is this low. And then if it gets to that, then there's an entire gap. So that would be the target until eventually you get another slow And then when that slow comes through, then cool. Now you know, get out of your shorts and wait for that slow to take place and then take the pop for the retracement. That's kind of the mindset that I like to follow the market flow, I guess you could say. Does that make sense?
Yeah, that makes sense. And in my opinion, for the rest of the day, it looks like New York's probably got their entry already for buys, so they're
Mhm.
going to run it up.
Facts.
That's just you know what I mean. That's just the way I'm looking at it right now.
Yeah, that's a good way to look at it. That's why we make the 936 to give us a really good bias on feeling comfortable that the countries have, satisfied their entries and can now allow the market to continue trending. So if you came to that same conclusion, then cool. They're all in their buy entries. They should protect their initial investment. So as long as you got a good entry on it, you too should think in that same headspace until proven otherwise.
Yeah, you
Uh, when should we use the VIX? Um, the VIX should be used when it is trending to the upside. If so, I guess a better way to put this is when should you use the VIX? Well, the VIX is an indicator of volatility. So you shouldn't need to worry about volatility if it's not high. But if volatility is increasing as a trend, right? It's not like a normal level of increase. It's actually a level of increase that's concerning. How do you tell if it's concerning or not? Well, if you look at these candles, right? Let's take a snapshot in our minds of these candles real quick. So this pretty big candle on the VIX. And these are really small candles on the VIX over here. So the VIX moves in phases. So if there is consolidation, then eventually you'll get that breakout, right? Eventually, that could take who knows how long. So the best time to use the VIX, or at least pay attention to it, is when it's on the run for the upside, right? If it's going down, then the market's fine. It's following all of your technicals. It's doing really well. Volatility is decreasing, meaning there's way less manipulation, and all of your technical analysis should just exist and you'll be fine. So there's no reason to follow the VIX as it's falling down because now you can just sit in your trade, let it ride. It'll usually blast off, do all the things, right? Retracement, stuff like that. The retracement will exist because the VIX increased in volatility, which caused a really major drop. So anytime the VIX is increasing, NQ, the market, is falling. So here you can see recently, I'm just gonna delete all this. So recently, this touch we experienced last week into this week of the VIX slowly increasing. And then here you can see VIX also increasing. So anytime these spikes happen, the market gets super manipulated. So everything that you know and love, like a 1, 2, 3 in an order block, or a Tokyo low and a Tokyo high, all those things will stretch way past than they normally will, which would make you believe that your trading is fucked up. When in reality, it's just more volatility. So the market has to compute and adjust the numbers in order to compensate that much volatility for the move that it's usually supposed to do. I really hope that makes sense if you follow along that sentence. So, uh, if cars work like this, I guess, it's like imagine if you filled your car up on a full tank. Your car knows how to regulate the fuel economy and it can tell you it can go this many miles off of a full tank. It won't use more fuel than it normally would unless you press the gas really hard, right? So the market is kind of the same way. And the VIX is the person that's pressing the gas. So as volatility increases, the VIX is flooring on the market. So it's going to use way more gas than usual, which means it needs to go fill up a lot more than usual. So think about that. How does the market fill up? The market fills up by grabbing liquidity. So if the VIX just made the market floor it all the way down, now when the VIX stops, the market needs to go get gas. So it's going to go all the way back up. And you're like, why the hell is it going up right now? It's because it was forced to go this low by the VIX, not normally, which means it's not going to allow your technicals to make sense until the VIX lets go, and then technicals make sense. They get it back to where it needs to go, and then VIX comes back in. It's like floor it, floors it again, and rinse and repeats, which throws traders completely off of their game because they don't know when to participate. So you're always going to be on the wrong side if you try to participate in both sides of that market. Does that make sense?
So that volatility is coming from like hedge funds and like bigger corporations and stuff like that,
Um,
correct?
I wish I could say that that is the only attribute, but it's not necessarily. It's an ecosystem. So, for example, let's give us like a lifestyle understanding, right? There's a jungle, and the jungle runs off of a lot of different things. There's the soil of it, there's trees that are in there, there's animals in there, and it requires everybody to do something in order for everything to take its natural course. So the hedge funds, yes, they are the start of the increase in volatility, but that doesn't mean that they will be the biggest driver. Believe it or not, all of the biggest drivers is you and I, right? We as a retail collective, like for example, if your mom and dad um are, chilling at home and they're on the news channel, the news is telling them about a market crash. So that insinuates the regular everyday individual to go check the markets. Every time someone checks the market and does something to it, right, like a buy or a sell or something, that is volatility. So a hedge fund may have a lot of workers and accounts, but they're not the only thing that contributes. So they're the start of the initiation to it, but afterwards it becomes you, your friend, your cousin. All these guys are now on the market as well. And that increases in volatility. And the algorithms are supposed to compete against that many consumers. That's why COVID was such a huge fiasco. And it's a really good measurement of the market algorithm because when everyone and their mom was trading Dogecoin, GameStop, AMC, they started breaking the mathematics of the market. So the hedge funds start it, but it's up to the people to keep that volatility going. So that's why the VIX can never stay too high for too long, because eventually people need to stop looking at their accounts and go back to work because life eventually turns back to being normal where people aren't scared anymore.